Okay, traders, we'll get underway. We have the Daily European Open webinar on this Thursday, the 10th of the 8th, 2017. A lot happening in the market at the moment with geopolitical tension and risk, and the market is very much focusing on the North Korea situation at the moment. As we speak, we're talking about really sort of increased unsettling relations between North Korea and the US. Just a general advice warning before we begin. Forex trading involves trading at risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okay, just a synopsis of the economic events coming up. We have RBA low before the House Economics Committee tomorrow morning at 9:30. Coming up to the Consumer Price Index, the pivotal economic announcement this week, a measure of the cost of change of goods, the US economy. Got an expected 1.8% result here on the year-on-year July figures, as well as 1.7% on ex-food and energy as well. So the market will be paying a lot of attention to that. But as I said before, the main focal point at the moment obviously is on tensions with North Korea, between obviously North Korea and the US. And the market has really sort of responded quite bullishly on gold and bearishly on the US as a result. So the crisis on the Korean Peninsula is exacerbating, obviously. On Saturday, the UN Security Council unanimously imposed new sanctions on North Korea in response to its recent tests of intercontinental ballistic missiles. And after these sanctions were levied, which could reduce the regime's annual export revenue by a third, the communist country vowed to exact 1,000-fold revenge against the US. Now, that's sort of started a slanging match, obviously, between Trump and North Korea. And we've seen that sort of exacerbate over sort of the last few days with, continued testing, obviously, on North Korea's missile program. Trump's concerns or comments came after the US intelligence came out that North Korea produced a miniaturized nuclear warhead, implying that its nuclear weapons program had already advanced significantly. So that sort of in itself has really sort of seen quite a bullish stance for gold. We said this yesterday. Obviously, the price was at around about sort of the 1260 level yesterday when we were doing the webinar, and we're now up at around about 1278. So, we've seen an absolutely meteoric rise in gold over the past 24 hours, and further upside is expected, and that's consistent with Trading Central's preference to 1283.5 and 1288.5 in extension. So we'll just go through the major pairs. We focus on the Aussie dollar, the pound, and the euro against the US dollar, US against the Japanese yen, gold and oil, S&P ASX 200, and the pound against the yen. Just with the AUD at the moment, currently the AUD is trading around the 78.74 mark here. We've seen sort of a modest gain today, a bit of a consolidated market during our trading session. The AUD USD has been suffering in mild risk-off markets, and with a resurgence in the greenback, a mild resurgence in the greenback has also sort of provided a little bit of a surge on the AUD USD. Chinese CPI missed, and consumer confidence was way off the mark yesterday. The recent slide in the AUD could extend to 78.35 in extension here if the US dollar rebound continues. But as we said, the geopolitical risk is really sort of stifling that confidence in the greenback generally, and it's really sort of been a bullish scenario for gold. But there are many analysts, particularly at Westpac and also NAB, suggesting that if the RBA remains firmly on hold as they expect and the US dollar rises on tighter Fed policy, then the AUD USD could fall to 0.76 by year end. Okay, so make of that what you will. But for the day ahead, the AUD is obviously lower on the daily forecast here. And we've got an entry point here on the daily time frame here. If you go to your daily chart on the trading view here, you'll obviously see that we've reached a bit of a flat in the market, a bit of a flat line on the Oz Stochastics indicator there. But on the 1 week, obviously we're at a high here. So we've had, that meteoric rise over quite a number of weeks, and then we're starting to see some tail off here with a high in the market on the weekly time frame. So the technical bias is bearish if you look at that sort of long-term trend there, but also on smaller timeframes on 4-hour charts, the price remains below a bearish 20 simple moving average, and most technical indicators are pointing to further bearish pressure, and that's consistent with trading central preference as well. Broadly speaking, on the pound, again, the pound has failed to rally on the back of USD weakness amid that political concern at the moment. The cable is navigating the lower end, obviously, of a trend that saw a top in the market at 132, and sort of the systemic downtrend really stemmed from the interest rate announcements last week, where they chose to put rates on hold at 0.25%. That yesterday's fade, where the greenbackers managed to recover some ground against the pound. There were domestic jitters around Brexit as well, which has really sort of added broadly to British pound weakness as well. Got the same with the euro too. The euro again has reached a bit of a top in the market here, only because we've seen such a meteoric rise over obviously the past few days. But we do have a situation here where the top in the market has really been reached at around about 118, the 119 level, but tailing off at the moment at 117.32. Now, if you were to trade, most of the major currency pairs against the US dollar at the moment, the Euro USD, as we're seeing here, having reached that top at 119, the daily RSI really hasn't confirmed yet convincingly, a massive sell-off. Okay, there might be an opportunity just to buy a dip in the euro against the weaker US dollar if that broad US weakness continues, but we'd expect to see that sort of retrace to around about the 116 level before sort of ultimately heading upwards as per trading central preference. Again, that's translated into, broad weakness on the US dollar against the yen. Obviously, we're continuing to see that ensue. Obviously, the yen has been so strong on the political situation, obviously with North Korea and the US. Japanese yen is often seen, or most seen, as a safe haven, where investors flock to that. Obviously, as one of the largest creditors, it might be seen as sort of further a safe haven to be flocked to, particularly around, sort of the USD Japanese yen pair, but also around the pound against the yen as well. We're seeing some broad pressure on that pair as well. Ultimately, on the daily, further targets of 141.99 in extension. And many analysts are probably tipping around about the 109, 108.50 level if we see, inflation data as well coming out on Friday being lower than expected, because if that does happen, historically that would place less pressure on the Fed to raise rates. If we had higher inflation, it would be different, but obviously less than forecasted inflation would actually spell a little bit of a bearish scenario for the US dollar. So we're seeing that corresponding rise in gold. Okay, as I say before, almost on every webinar, we see a really strong inverse relationship between gold and the US dollar Japanese yen. And at the moment, we're trading around the 1278 level. We've got Trading Central actually issuing targets of 1283.50 and 1283.50. Sorry, 1283.50 and 1288.50 in extension. The Swiss franc as well has also gone up in value against the US dollar, and that's seen again as a safe haven. Jumped 1% against the euro yesterday. Recorded one of its largest single-day jumps against the euro since the Swiss National Bank removed its cap on the Swiss franc in January 2015. So that's really sort of a massive jump on that particular pair. So really it's about Swiss strength and Japanese strength, as we've seen on these pairs as well. We really know that often in times of geopolitical tension, partly because both countries have big current account surpluses. As I said, Japan is the world's biggest creditor nation, and there is an assumption that Japanese investors may repatriate, in a sense, their foreign holdings in times of heightened global uncertainty. So we're kind of, fundamentally it would make sense to sort of pay attention to that when you're trading these pairs as well. Supply issues continue with the crude oil production as the OPEC meeting had concluded. But what we're seeing now is JP Morgan actually issued a very telling statement saying that oil would be capped at around about 70 a barrel. So really the best opportunity on oil at the moment, sort of above this 50 EMA, is to buy some dips in this actual commodity and wait for the price to retrace before we ultimately buy it back up as well. S&P ASX 200 continues to trade within a very tight range of 5,800 and 5,600. We're seeing that sort of narrow even more. Okay, it's been a very, very sort of unusual consolidated range that's actually emerged here over the past few weeks. I'm going to see a breakout above 5,800 or 5,600. Then we'll probably see a continuation of a trend. But as I said, with the geopolitical risk uncertainty, there's jitters overseas in the markets, and usually that transposes over to a negative scenario for the ASX as well. So one of the main trades to focus on tonight would be further upside on gold. We did send an SMS out just now on gold to targets of 1283.50 and 1288.50 in extension. Ultimately, we've got a top in the market at 1295, which was reached back on the 6th of the 6th. So look, probably where it's going, okay, given the fundamental factors happening in the world at the moment. But at the moment, we've got the good entry point on a daily time frame on the stochastics level here. It doesn't look to be sort of the wrong time to get into the trade. It's really a case of getting into your trade, and conservative use of stop in the market really at the daily of the opening candle is usually a good indication about where you should set your stop. And currently that daily open was today at 1275. So that could be used as a stop in the market. But remember, the pivot level on the intraday is 1270. So giving yourself a little bit of an extra buffer in the market at 1270 could help you not get stopped out early of that sort of trade if we see a little bit of volatility to the downside in the meantime as well. Okay, so the focus for the rest of the week on the economic announcements will obviously be on the CPI. The NFP came in better than expected last week, but the CPI, again, if we get a worse than expected announcement on the forecast, then the less pressure placed on the Fed to actually raise rates, which, if that's compounded with talks about the debt ceiling being raised in the US, and that could spell further trouble for an already weak US dollar. But it really will be wait and see mode and being able to essentially see what's going to happen on that front. But for the time being, we'll cap it there for now. If you have any questions, particularly about any currency pairs tonight or any economic announcements coming up, then please get in contact with myself or your respective account manager. We'd be more than happy to assist you. And we look forward to seeing you at the next webinar. Thank you very much. Cheers.